Hi, Wes Volson, the CEO of Citratech, and you're watching Taking Stock.
He is.
The main event.
2 minutes ago, here into the closing bell on the trading floor of the New York Stock Exchange on this Wednesday, August 26th. Peter Tuchman, the one and only, the truly iconic Einstein of Wall Street, kicking us off here at this hour. Look at this market. It feels like everyone's waiting to see what Jensen Huang and NVIDIA have to say. The market trying to find its identity. What do you see today?
I'm seeing it traded with technicals, right? This is a perfect great trader's market, right? With momentum on the way down, hitting sort of a double bottom and then rallying back up. I think it's obviously it's NVIDIA and it's also Jackson Hole, right? Waiting for some clarity coming out of the Fed chairman on where we're going to go, how sticky is inflation and whatnot. I mean, that's sort of a confused market in a way.
Yeah.
It's really, I mean, the sellers came in, the sellers stopped, and then the buyers came in. It's not, I wouldn't be too concerned about it. We're still trading at reasonable levels. You know, tech has been through a lot of rotation this week. Right, there's a little bit of confusion, a little bit of rotation, but net, it's an okay day. We're ending on the upside. There is some green on the screen, but NVIDIA earnings can be so telling. Let's go back to November, go back to the last earnings. They've been stellar for a long time. Question is, over the last few months, are we running into any kind of headwinds in the CapEx versus monetization story?
Yeah.
Right? And that's what we're going to hear about today.
That's really well
so
said.
All eyes are on NVIDIA for the close.
NVIDIA down 1.7% into the closing option here on Wall
Last
Street.
time it was down and earnings came out, they came out, they were stellar and went up.
And we'll see what happens tomorrow's tape.
Love
Peter
you all.
Tuchman, thank
Nixon
you.
5.
Time for the close. Nixon 5. All right, well, there you have it on this Wednesday, August 26th. Come on in here, Tim Anderson. So we're going to take a look here at the big board together here. We'll do the market check together. Your final tail of the tape on this Wednesday afternoon. The S&P in negative, look at this, negative territory, 0.02%.
Yes.
The Dow down 0.2. The Stock Exchange Composite Index in the red, 0.1%. The small caps down 0.14%. Peter and I were just talking, a market trying to find its identity, or is all this just kind of wait and see for what Jensen Huang has to say in the next 30 minutes?
This is a lot of wait and see. It's the market's just been in some churn really for the last 3 to 5 days. It's almost like the calm before the storm with Jensen Huang from NVIDIA speaking at the earnings call tonight, probably within an hour. And then, of course, Kevin Warsh speaking Friday morning. And one of the great conversations or debates that I had with people during the week was going on among a number of people, market watchers, was who's going to have more impact on the direction of the market for maybe the rest of the year? Is it Jensen Huang when he speaks tonight, or is it Peter Warsh? Or is it Kevin Warsh on Friday morning?
Yeah.
And
what's your take?
you know, I think it actually might be Jensen Huang because Kevin Warsh is not going to tip his hand. He's on inflation. He's not going to give any forward guidance. The highlight of that conference, the theme of that conference this year is on the impact of technology on the economy, and I think he's going to make a lot of very salient comments on that, but he's not really going to give people a roadmap for where we're going the next 6 months in terms of rates. I think we're going nowhere. I'm in the minority. I do not think they're going to hike rates between now and the end of the year. And in fact, I think their next move is probably going to be a cut, whether that's late this year or early next year.
So a series of holds, but eventually, says Tim Anderson, an interest rate cut at 25 basis points.
Yes.
Would be your take at some point. So let me ask you, what does the Fed do with the PCE inflation number we got this morning? Headline, I believe, 3.7, core PCE 3.3. Hey, we heard Powell for years. We've heard Warsh say the goal is 2%.
Right.
3.3 is not 2%.
Number, no, I know it's not 2%, but that was really a pretty benign number. Yeah. If they believe in looking at trends, that's basically unch from last month. I know the headline number was up 1/10, but I think that there are forces really that are behind the scenes pushing inflation lower. Just as an example of that, we're still in this war in Iran, although it's not really active fighting right now, but it's an unresolved conflict, and oil is in the 80s. It's not in the 120s.
Yeah, that's true.
So I think if people had told you months ago we would still be talking about this war a week before Labor Day weekend, you would think that oil would be well above 100.
Sure.
So I think that the oil market is telling us that there's waste, that this whole skirmish is closer to getting resolved than a lot of people are reporting.
I only have about a minute left, but it's not just NVIDIA today. We'll hear from Okta, CrowdStrike, Salesforce,
yes,
CRM. What's on your radar? Have you seen some of those names and sectors move this year?
Yeah, there's another stock called Everpure, I believe, used to be Pure Storage. The symbol's letter P. It's had a big move the last 3 weeks. I think they report tonight. And it's one of those periphery stocks that could get impacted by what NVIDIA says. A lot of people have talked about what NVIDIA says might impact 10 to 15 stocks on the periphery of the AI build out, even more than themselves. And so there's a list of stocks that people are looking at.
There certainly is. We'll hear what Jensen Huang. He dresses very sharp. I love his leather jackets.
Yes.
He's like the coolest dude in the game.
I wonder how many of those leather jackets he has. Actually.
That's a good question. How many leather jackets does he have? They got a $5.2 trillion market cap.
He's got to have a few of them.
You got to have a few of them, and they are Tom Ford, I believe.
And I would just say,
please.
And I would just say, if you're watching and if you're a investor at home somewhere, I would wait beyond the headline earnings number until the conference call and the commentary from the conference call.
First move is often the wrong move.
Especially with NVIDIA, because that's what's going to really tell the whole story. Is his comments later.
Tim Anderson, rocking and rolling. Kick off the broadcast. Thank you for being here, bud. We'll talk to you again soon.
Hey, it's a pleasure.
Blake will grab your mic. All right, Howard, here are a few of the top analyst calls that move the tape down here on Wall Street. Look at this. It's wide open for us, Howard. First up, Morgan Stanley reiterating SpaceX is overweight, saying shares look pretty attractive at these levels. Shares trading around 137, still down 8% from where, they first opened at 150. Next up, Truist downgrading Dick's Sporting Goods and Nike, both to a hold from previous ratings of buy. DKS falling 30% in yesterday's session after earnings. New price target there of 135. Nike, meanwhile, has now erased 12 years of gains. My goodness. Finally, Jefferies downgrading TJX companies to a hold. Of course, that's TJ Maxx and Marshalls, Home Goods, etc. They say shares are likely to stay stuck range-bound for the time being. Shares took a huge dive after earnings last week, now in negative territory, 10% since the start of 2026. How about a look at one of the better performers in the S&P 500 today? This is shares of Oracle up 2.8%. Analysts from Citi this morning calling this a, quote, historic opportunity to own the stock. Shares saw a 54% drawdown over the months of June and July. They have somewhat stabilized since then, but they are still down year to date 24%. Well, the New York Stock Exchange's very own Ashley Mastronardi sat down with U.S. CEO Neil McDonald of Moomoo to discuss the ways that they are helping investors better discover tokenized assets. Take a look.
The International Executive Retail Forum is happening at the New York Stock Exchange. It's an annual gathering of global retail brokers and fintech firms aimed at expanding U.S. investment. Joining me now is Neil McDonald. He is the CEO of Moomoo US. Neil, welcome.
Thank you very much. And so nice to be down on the stock exchange floor. Thank you very much for the invitation.
It's so great to have you. What are your takeaways from the conference so far?
It's great to be here. I've been in the conference room. We have brokers from Korea, brokers from Japan, lots of brokers from the US. And I think it shows you the importance of the retail broker. Maybe a few years ago, you wouldn't have had this conference, but retail, through firms like ourselves, have really democratized investing, really given industrial grade tools to the retail investor. We give information, we give all the data. I spent years at a hedge fund and investment banks trading on a trading desk. And now your average retail investor through apps like Moomoo are able to access the same tools that I had at a hedge fund just a few years ago.
Speaking of democratizing investment, how are you doing that at Moomoo?
It really is our mission. I've spent 37 years in this business. Started off on the trading desk, And retail traders were always the people you wanted to trade against, right? They lacked information, they lacked access, they lacked community and any kind of risk discipline, and they lacked the tools. If I look at what you can do on the Moomoo app or the Moomoo desktop right now, you have back testing, you have algo building, you have AI agentic trading. So everything that I had and even more at a hedge fund as a quantitative trader, all of those tools are now available to the retail trader really for the first time. So the playing field is very level. There's no more informational asymmetry. There's certainly not access asymmetry. And we've given, and other companies have given access to retail investors to really industrial grade, professional grade tools.
How are you helping everyday investors discover things like tokenized assets in the blockchain?
Back in February, Figure, which is a blockchain HELOC blockchain company that we helped to bring IPO back in September of last year. We're very close to the company, and they went to the other brokers and said, we're going to do a secondary IPO, but we've registered with the SEC to do it in blockchain native format. So it's a token, but it's SEC registered. That's a big difference. It's not a wrapper. It's not just some kind of fake representation. It trades one for one with the stock. So we were the only US broker who was able to offer that through the IPO. So if you go onto the Moomoo platform, you can look at Figure. You can buy the normal NMS DTCC settled normal stock, which settles T+1. You can also, just with fiat, you can also buy the Figure token, and it's instant settlement. It's on chain. So the way it will work within our system is you have cash in your buying power. We convert that to a stable coin called YLDS. We then get it minted on the back end at Figure, and then we represent that token in your portfolio. So it's fairly seamless from our end, but you have true ownership of the stock.
How is the role of the retail investor changing in the current investing landscape?
I think you can tell from today, the fact that NYSE is doing this today shows the importance of the retail trader. I think, as I said years ago, the retail trader was not maligned, but they didn't have the information. They weren't really a part. You look at the daily volumes. If I look at our busiest ever day for cash coming into the Moomoo ecosystem, it was Liberation Day last year. So retail investors are famous for buying the dip. They bought every dip in NVIDIA. They bought everything in Micron. If you look at performance for hedge funds, for leveraged hedge funds, for long short funds, and compare that to your retail investor, the buy and dip retail investor is doing better than a lot of the professionals in the marketplace.
You're talking about investors having access to information that they didn't. What does Moomoo do to educate their investors?
So we have data from guys like NYSE. So we give level 2 data. When I started, when say Procter & Gamble had their results, we'd have an analyst go to Cincinnati. He would dial up on a landline, call down to the trading floor. The sales guys would speak to their clients. So as a retail investor, you found out the next day in the Wall Street Journal or in the Financial Times. We have news feeds. We also, what makes us very, very different from our competition is we have this inbuilt community of 30 million people globally. So we have chat rooms for every stock, general chat rooms. We have hundreds of thousands of interactions on a daily basis. So we give this community. So whenever I trade, before I do any trade, I ask a question. Is this the right entry level? Is this the right exit level? And I will get answers from people in Melbourne, in Tokyo, in Hong Kong, or the US.
All right, Neil McDonald, CEO of Moomoo, thank you for joining us at the New York Stock Exchange.
Thank you.
Welcome back to the broadcast on this Wednesday afternoon, live from the trading floor of the New York Stock Exchange. Our next guest joins us now, John Kiko, Senior Director of Investments at Hashgraph. Nice to see you today. Thanks for taking some time for us.
Thanks for having me.
Let's talk all about Hedera. I know it's a crucial part of our conversation here today. For anyone a bit unfamiliar, what is it and what makes it different?
Yeah, so Hedera has been around for 8 years now. So we went mainnet, public mainnet. It's a layer 1 enterprise-focused distributed ledger technology. It's a long word to say blockchain, but it's unique in the sense that it is enterprise-grade scalability, speed, its price predictability is really crucial, and our governance is quite unique because there's 39 known parties. They're Fortune 500 companies representing tech, big tech, consumer, discretionary. McLaren Racing is one of the governing council members, Accenture, a system integrator. So it really spans a whole sort of broad group of industries that are supporting and operating the network. So that's quite unique versus a blockchain There are unknown validators that are operating and validating the network. So enterprises are feeling a lot more comfortable utilizing Hedera as a settlement network for tokenization, for example.
And some other interesting use cases, Lloyd's and Aberdeen using Hedera for collateral. What's the differentiator there? What do you think they were most trying to fix in that equation?
Thank you for bringing that up. So Lloyd's Banking Group is a very large UK-based bank. Aberdeen is a large asset manager. And what they've done is to demonstrate money market funds on-chain used as collateral for a production-grade FX transaction. And what we've done in the US is actually be part of a largest collateral sandbox using tokenized money market funds as collateral to effectively move across 39 organizations such as Citibank, BlackRock, JP Morgan, and Fidelity to show the use case of tokenized money market funds in the United States. And that's settled on Hedera as well. So we just finished that early July.
That's awesome. Congratulations on that. What are institutions testing in the Onera sandbox? You mentioned the sandbox there recently.
Yes.
Let's dive into that a little bit more.
Yeah, absolutely. So what is the significance of that? So it's taking the existing market structure of traditional securities and taking collateral like banks, custodians, tri-party agents, using the existing market structure we've tested using blockchain technology or Hedera to settle and move assets. And so what we're moving towards next is a production pilot. In end of this year, we're going to have these same large enterprises, financial institutions, using blockchain for real life collateral mobility. And there's hundreds of trillions of dollars being moved daily. And so this is a significant sort of movement in the industry.
I'm about out of time. I want to squeeze in this last one, actually, producers. We'll bump to the last block. I got about a minute left. Interoperability, remains a huge challenge. How does your Clipper protocol help different networks actually work together?
Yeah, what's really important is that we're seeing more and more fragmentation and more blockchains being spun out from banks and a lot of sort of fintech companies. We're needing interoperability across these networks, and we need it in a way that's safe. And so cross-ledger protocol by Hashgraph allows value to move across networks without trusting a third party. And that's really important because we have too much exploits using bridges today, and there's been $20 billion plus of hacks that we've seen in the industry. Wow. We cannot tolerate that no longer.
I knew that was worth it to get in that last question. John Kiko, thanks for being here.
Thank you.
Really good to see you. Don't go away. A whole lot more taking stock coming up after this very quick break. Welcome back to the show. Time now for a few headlines in the world of fintech, crypto, and artificial intelligence you need to know for your Wednesday afternoon. First up at this hour, the crypto majors kind of in mixed territory. ETH up about 1%. Bitcoin holding on right around 78,433. Next up, the SEC sending proposed changes to its crypto custody rules directly to the White House for review, aiming to clarify the way that investment advisors and funds can hold on to digital assets for their clients. Finally, Revolut launching a EuroPeg stablecoin called EURR with an initial rollout in Denmark, Poland, and Portugal before expanding across the Eurozone later this year. Earlier on today, FinTech TV's very own Johnny Fernandez sat down with Joe Cavatoni of World Gold Council. They discuss what's behind gold's recent resurgence. Take a look.
The International Executive Retail Forum is happening at the New York Stock Exchange. It's an annual gathering of global retail brokers and fintech firms aimed at expanding U.S. investment. Joining me now is Neil McDonald. He is the CEO of Moomoo US. Neil, welcome.
Thank you very much. And so nice to be down on the stock exchange floor. Thank you very much for the invitation.
It's so great to have you. What are your takeaways from the conference so far?
It's great to be here. I've been in the conference room. We have brokers from Korea, brokers from Japan, lots of brokers from the US. And I think it shows you the importance of the retail broker. Maybe a few years ago, you wouldn't have had this conference, but retail, through firms like ourselves, have really democratized investing, really given industrial grade tools to the retail investor. We give information, we give all the data. I spent years at a hedge fund and investment banks trading on a trading desk. And now your average retail investor through apps like Moomoo are able to access the same tools that I had at a hedge fund just a few years ago.
Speaking of democratizing investment, how are you doing that at Moomoo?
It really is our mission.
Joining me to discuss this and more is Joe Cavatoni, Senior Market Strategist and Head of Public Policy U.S. World Gold Council. Joe, thanks so much for being with us. Good morning. How's it going today?
It's exciting. It's going well. Thanks for having me. I'm always excited to be back and talk about the gold market, which, contrary to popular opinion, maybe 4 or 5 years ago, is probably one of the hottest markets for people to keep an eye on today.
So let's start off with that. Let's start off with this new renewed rally that we have going on. We saw spot prices drop below. I'm looking here about 4,000 over the summer, but now we're back to 3 months high. What's the reason for this run?
So remember, we had a 162% return in gold up to January of this year. Now what we're seeing are the fundamentals that we've been talking about, keeping that gold price rising, and those floors, those new floors, that 4,000 level, the 3,500 level, 4,000 level, that's coming back to be a very, very relevant and certain topic that needs to be addressed. It's debt levels at the fundamentals for G7 nations. It's how the U.S. is going to deal with this shift in how inflation's actually developing, and more important than all, what's going to happen with fiat currencies and the debt that goes with that fiat currencies as a reserve asset.
All right, so this summer we also saw gold consolidate for a number of weeks. So what does that actually say about the technical setup for the spike that we're seeing right now?
So I think people are looking at gold in two ways. There's the momentum trade, where they look at things that are like flare-ups around conflict, war in Iran, but those things tend to push the price, then pull it back down. Where we are today is we're actually setting back into a slow, steady climb that's actually based on this whole economic condition that's basically playing out around these big countries. And this debt level you talked to, the $40 trillion, is now a big number. It's a big concern. And we're watching what Besant and Warsh are going to do on their sides of the table to manage the concerns around that. Can people buy these assets comfortably as the safe haven or the store of value that they need? And will gold fill the role as a wealth-preserving asset?
So I also want to talk about Jackson Hole, because that is something that everyone is looking forward to on Friday. It's the big talk of the town. So what are you watching for from the presser that's going to be happening? And what exactly will this mean for gold?
Sure. I think what we are trying to keep our close watch on is exactly what the mechanisms will be for the control around inflation. I know everyone's wondering if rates will be hiked or cut, but you need to see a little bit more detail around whether or not that definition and the understanding of how inflation's taking place in these markets will be reassessed by the Fed, and if they will look at things slightly different than maybe we have in the past. I think that's been a big shift in what we've been hearing and seeing around the globe. We've had transitory inflationary pressures, but you have introduction of technology, of changes in the way that people are living, debt levels, etc. And these are all having much more complex implications on inflation. So I want to see if I can hear more from the Fed on how they're assessing the definition of inflation, because then we'll be able to see more appropriately how they're going to look to the rate market to handle the pressures that come along with it.
So GOD is a popular gold miners ETF. So take us through the ETF inflows and what you're tracking with gold funds specifically.
So GLD, the Spider Gold shares, is just the spot price of gold. So it's actually the perfect instrument if you want to invest in gold. If you want to buy miners, there are other instruments you can buy, but this is actually the instrument of choice for people who want to have price performance of gold. And what's driving it right now? Two factors. Number one, the fundamentals continue to drive flows into ETFs, this debt question and this concern around fiat currency and debasement, as you put it, but also a little bit of momentum. People are anticipating what happened with the bond market on Monday, what's happening this week with the Fed and Jackson Hole, and then the September FOMC meeting. So they're kind of getting ahead of it. So we see a little bit of that momentum pushing the price up too. You can see that as well in options and those derivatives that are linked to speculation and calls on the bull market, in particular in GLD.
Awesome, Joe. Well, definitely interesting to see how gold progresses and see what's going to happen in the future. But thank you so much for joining us. A pleasure to have you here.
Great to be here. Thank you.
Thank you.
I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money, where we look past transactions and into control. Today we're going to be looking at Kyriba, and it is the system many of the world's largest companies use to answer a deceptively simple question: where is our cash and what is it exposed to? Kyriba provides enterprise treasury software to manage liquidity, FX exposure, debt, and financial risk across global operations. So how does Kyriba actually make money? First, enterprise treasury subscriptions. Companies pay recurring fees to centralize cash positions across banks, currencies, and geographies into a single system of record. Second, volatility management. FX swings, rate changes, and liquidity gaps don't show up as bugs, they show up as earnings surprises. Treasury teams pay to see and manage that risk before it hits that P&L. Third, scale-driven stickiness. The more global a company becomes, the harder it is to unwind the treasury infrastructure once it's embedded. And why does this matter right now? When rates were near zero, treasury was operational. Today, it's strategic, and mistakes are far more expensive. Kyriba monetizes certainty in an uncertain environment. And that is how Kyriba actually makes money, by turning global cash chaos into something finance teams can control. With that, back over to you.
Thanks for watching the show. We'll see you again tomorrow from the New York Stock Exchange.